Your bank charges was one of your other expenses that increase. So you're going to take 1,800 Rand times by 20%. So on your calculators, wizards, 1,800 times 20%. And that should give you an amount of 360 Rand. So 1,800 Rand plus 360 Rand will give you an amount of 2,160 Rand. Now, wizards, with your depreciation, remember we bought equipment, so we need to calculate depreciation on that equipment as well. Equipment that'll be purchased for 48,000 Rand, and it'll be depreciated by 10% per annum. You're going to take your 48,000 Rand divided by 12. If you take 48,000 Rand divided by 12, it'll give you an amount of 4,000 Rand. Now remember, it's 10% on cost price. So let's say it was 4,000 Rand per month. 4,000 times 10% or 10 over 100 will give you an amount of 400 Rand. So your depreciation for the one more month, which is your month of September, was for the value of 400 Rand. So that's what you're going to add on to your depreciation. You know how we work this out, wizards? Because we're doing it monthly. If it was annually, you would have just taken the 4,000 Rand. So going back to your depreciation, 1,050 Rand plus 400 Rand, which is your depreciation for the new equipment bought for the year of 48,000 Rands, will give you 1,450 Rand. We now need to total our operating expenses. So the total for your operating expenses will start with each operating expense being added. So take your calculators, wizards. 2,500 Rand plus 1,800 Rand plus 1,050 Rand plus 1,750 Rand plus 600 Rand plus 1,000 Rand plus 8,800 Rand plus 900 Rand plus 5,650 Rand plus 3,500 Rand. Press equals on your calculator, wizards. That should give you an amount of 27,550 Rand. Next, we take a look at August. You're going to take 2,750 Rands plus 1,800 Rand plus 1,050 Rand plus 1,750 Rand plus 660 Rands plus 1,000 Rands plus 8,800 Rand plus 900 Rand plus 5,650 Rand plus 3,850 Rand of 28,210 Rand. That's your budgeted operating expenses for the month of August. So you're going to take 2,750 Rand plus 2,160 Rand plus 1,450 Rands plus 2,100 Rand plus 660 Rands plus 1,200 Rands plus 10,560 Rands plus 1,080 Rand plus 6,780 Rand plus 3,850 Rand. You should get an amount of 32,590 Rands. So your total was 32,590 Rands. Now, wizards, next we look at your operating profit. Your operating profit would be your gross operating income minus all of your operating expenses. 43,200 Rand minus 27,550 Rand for July, the month of July. We're working with those figures here. So 43,200 minus 27,550 Rand will give you an amount of 15,650 Rand. And we're going to do the same for August and September. So wizards, now you have your operating profit for July of 15,650 Rand. We're going to do exactly the same for August and September. So if you go to August, it will be 43,520 minus 28,210 Rand. And that will give you an amount for your operating profit of 15,310 Rand. Lastly, for September, 47,520 minus 32,590 Rand. It should give you a lesser amount of 14,930 Rand. That's your operating profit. Next, we look at your interest income. So let's go to your information page. Your interest income, was it? On your fixed deposit was for the amount of 3,840 Rand. So we're going to take 3,840 Rand divided by 12. That will give you a monthly amount of 320 Rand. Were there any additional information for your fixed deposit? It says that your interest on fixed deposit will remain unchanged. So there are no changes to your fixed deposit. So it will remain 320 Rand for the balance of July, August, and September that we're expected to receive. Lastly, wizards, we're going to look at your profit before interest expense, your interest expense, and your net profit for the year. So your profit before interest expense would be your operating profit plus all interest income. Why do we add it? Remember, we're receiving interest on our fixed deposit. So 15,650 Rand plus 320 Rand on your calculators will give you 15,970 Rand. For August, 15,310 Rand plus 320 Rand will give you 15,630 Rand. Then for September, 14,930 Rands plus 320 Rands will give you an amount of 15,250 Rand. So the last two calculations that we need to do is for your interest expense and your net profit for the year. Now, the reason why I've left your interest expense for last is because we had some changes to our loan amount. Now, let's firstly look at your interest expense for the year. It was for the value of 7,500. Can you see that, was it? So you had interest expense to the value of 7,500 Rand. So you're going to take 7,500 divided by 12. That, wizards, will give you an amount of 625 rands. Now remember, seeing as this is an expense, it's money going out, we'll subtract it, so you have to have brackets around it. Next, we had additional information that had an adjustment. So it clearly states the firm has a mortgage of 50,000 Rand with Absa Bank. The rate of the interest is 15%. 10,000 Rand of this mortgage is repayable by the 1st of August. So 1st of August means for the entire August, 10,000 Rand was already paid off. So what you're going to do, wizards, is you're going to take your 50,000 Rand minus 10,000 Rand, and that will leave you with an amount of 40,000 Rand that's repayable. Now, wizards, this 40,000 Rand has an interest per annum or per year of 15%. So if you take 40,000 times 15%, or 15 over 100, it will give you an amount of 6,000 Rand. So we're going to take that 6,000 Rand for the month of August and September. So we're going to take here your 6,000 Rand and divide it by 12 months for August and September. 6,000 divided by 12, wizards, easy calculation, 500 Rand. Then lastly, your net profit for the year will be 15,970 Rand minus 625 Rand, which will give you an amount of 15,345 Rand. For September, 15,250 Rand minus 500 Rand will give you an amount of 14,750 Rand.
We need to learn to live with the COVID virus, the new normal, at least for the next few months. And we have just what you need to make sure you never miss a single school lesson. And it's absolutely free, mahala! High quality, powerful, animated lessons for all your subjects. So don't spend a cent until you have tried iWiz. It's everything you need. All video lessons, textbooks, workbooks, exam prep. We want you to ace 2021.